The crypto markets are on fire. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. It's an all-time high kind of day.
It is indeed.
Let's have a look at Bitcoin. Yeah. The CoinDesk Bitcoin price XBX index is over $68,000 and change, up about 3.8% over the past 24 hours. And the CoinDesk Ether price ETX index is at $4,809. ETH is charging along, up 2%. And the new DFX, CoinDesk's DeFi index, is at 682 points, is also making an advance of about 3.75% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So obviously our top story is the sea of green. Bitcoin hitting an all-time high of $68,525. ETH also hitting an all-time high of $4,839. The crypto market cap right now passing $3 trillion. What's going on, Lawrence? Why now?
More buyers than sellers, but also I think there's that's a joke, everyone. But I think also too, it's you do have some excitement happening in the NFT market, and that's generating this interest in the different sort of platforms those NFTs can be traded and created on, and that makes it a lot more interest in these in the alts, and that might actually be helping the sort of general bullishness in crypto, in the overall market. And what's the biggest crypto out there? It's Bitcoin, and then there's ETH. And ETH, it's expensive to use Ethereum now, but still, it's this this sort of like, hey, I just I'm excited about the NFT market. I'm excited about everything going on in it. I'm just going to buy everything crypto. And
well, that explains, why ETH is going up. But taking a look at Bitcoin, I'm noticing that there's a lot more accumulation going on among miners, among hodlers. The supply is illiquid. And so, the Bitcoin community narrative is that with the Fed's and central bank stance that, this inflation environment is not so non-transitory, that it could be a good time to hold on to your crypto. But Emily, what are your thoughts?
Yeah, I mean, I appreciate Lawrence not making up a reason, because, they're really, if you ask 100 different people, they're going to give you 100 different reasons why Bitcoin is rising right now. Obviously, some of this is the momentum still from the Bitcoin futures ETF, but it's I think what's more interesting is that Bitcoin is rising in spite of several factors, most notably this US infrastructure bill, which is not good for crypto, a Chinese crackdown, which everyone has kind of like forgotten about at this point. So the fact that neither of those things are really bringing the price down is what's actually quite interesting to me.
All right. Let's dive deeper with our crypto markets guest.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the crypto markets is Sam Sidhu, President and CEO of Pennsylvania-based Customers Bank. Hi there, Sam. So taking a look at this explosive crypto market right now, what's going on? What kind of data are you following to make sense of this huge advance?
Sure, absolutely. Well, thanks, Christine, Emily, and Lawrence for having me. So glad to be here. I think that, Customers Bank, and I'm sure I'll spend a little bit more time talking about our involvement in the crypto industry, but, we're not necessarily advising our customers to buy exposure, nor are we necessarily experts, but our customers are experts and very important industry participants. And I think the trend that you're seeing, Lawrence's joke aside about supply and demand, is that crypto has become too big to ignore. And if banks are not really entering the space, if investors are not entering the space, if ETFs and funds are not entering the space, you'll get left behind. And I think that's the trend that you're starting to see, is that most of the institutional customers are not in the space yet, or rather, but they will be. And the exchanges and the OTC and the liquidity providers and the market makers, they really are starting to represent what the traditional financial markets took decades and decades to build, and they're doing it in a very quick and fast and rapid space, but arguably with much smarter folks than that helped build the industry decades ago in the traditional sense.
Yeah, that makes a lot of sense. But could you venture an explanation for why this is happening like right now? And there really is no right answer to this because nobody knows. But like some of the trends that you're talking about have actually been going on for a while, right? So what explains this explosion over, even the past few days, in your view?
Sure. I think there's new news that comes out every day. I think that what you're also seeing is that the government stimulus, especially for federal unemployment, lapsed about 4 to 6 weeks ago in the way, in the form that it was before. And I think that you're seeing every day a new bit of news, along with markets at all-time highs. And then, as such, crypto markets are also at all-time highs. I think I read yesterday that Jeffries was selling gold and buying Bitcoin, and I think this is just a inevitable momentum that is now picking up pace.
So, Sam, on your end, what kind of customers particularly are you noticing going into this space now that weren't before? Can you narrow it down as to the type of buyer you're seeing?
Sure. I think that there were a lot of folks on the sideline as recently as this summer. So, for example, I think Goldman Sachs called it about 6 months ago, said 40% of their private banking customers owned cryptocurrency exposure. I think that number is far higher right now. And as we all know, there's a convergence. It was more a barbelled approach where you had the ultra high net worths who are getting exposure, and then the average retail investor. And I think what's happening right now is the middle of the pack is also really starting to enter into the industry from an investment perspective. And it's moved far beyond curiosity and actually into taking action.
But is there anything in particular you noticed about those buyers? Are they younger? Are they older? Are they how large of a net worth? Are these people with people who have been in the business before? Kind of like pinpoint what's their profile?
Sure. And I think what I would say is it's probably not the best answer you're looking for, and it's not the most insightful, but it is broad based. And I can use our company as an example. Of our employees, as we were entering into the crypto space and into the blockchain and the real-time payment space, we had 3%, 5% of our employees who had either an investment in or a strong understanding of the cryptocurrency space. Now, if you ask even our board of directors, who skews a little bit older, everyone, especially with the advent of the Coinbase going public and so many other new exchanges out there that are so user-friendly, and the onboarding and the on-ramp to cryptocurrency is getting easier and easier, especially with the introduction of banks like ourselves who are helping to facilitate that. It's just building momentum across the board, and there's no one specific investor that I see in my day-to-day that is driving that, but it's more broad-based adoption.
Mm-hmm. Well, Customers Bank is a small bank, but you've been quite bullish on crypto for a while now. You have your own token, the Customers Coin, and you're making a big play for business clients from the crypto sector. Tell us a bit about that.
Sure, absolutely. So, Customers Bank, as a bit of background, is a forward-thinking, high-tech, supported by a high-touch, top 100 bank in the United States. So we're extremely focused, and we have been extremely focused on tech-forward and digital-first customers. And our banking of the crypto and digital asset ecosystem is really just an extension of that. And the way that we do this is we really, and this is across the board, not just for our digital asset customers, is we enable them through a layer that sits on top of our tech stack and our tech infrastructure. And to your point, in October, we launched the Customers Bank Instant Token. And really what that is it allows two customers of our bank to transact in real time, 24/7, 365 on the blockchain. Really no different than SEN or Signet. And the types of customers that we have onboarded and are continuing to onboard our top 5 exchanges, all of the top OTC desks, largest stablecoin providers, and several of the largest liquidity providers.
I just want to go back to something you just said earlier about the overall market and kind of how everything is booming. What kind of correlation do you expect to see just over the next few months between crypto markets and just the stock market, right? Because that's another part of the story. Some of this is not a crypto specific boom.
Yeah, no, absolutely. I think that what you will see is it's a little bit counterintuitive when you think about maximalists in the cryptocurrency ecosystem, but I think there is going to be and remain high correlation with the financial markets. When you saw valuations pull back in the second quarter of this year, you also saw cryptocurrency valuations pull back. As you're seeing markets at all-time high on a daily basis, you're also seeing Bitcoin at an all-time high on a daily basis. And I think a lot of that has to do with liquidity and sense of overall net worth and the ability to take some chips off the table and move them from a traditional investment into, say, a more speculative, arguably, investment, but a growing portion of investors' asset class. The desire has been there, but when you have a larger bucket and pot to play with, you can now move more of your investments over.
All right, great. Sam, thanks for joining us. Appreciate your insights. It's been an incredible past 24 hours. That was Customer Bank President and CEO Sam Sidhu. Coming up, we'll check in on Asia and global financial watchdog FATF's guidance to prevent money laundering in the crypto industry. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Megha Chatta of Forecast News.
Welcome to the Daily Forecast, November 9th, 2021. I'm Megha Chatta of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Crypto markets continue to break records, with Bitcoin and Ethereum hitting new all-time highs and the global crypto market cap breaking through the $3 trillion mark. We'll take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, amid ongoing global logistics issues caused by the COVID-19 pandemic, a group of companies have teamed up to use blockchain technology to speed things up. 9 companies from China, Japan, Australia, and Saudi Arabia have announced they are establishing a blockchain platform designed to make trading bulk commodity cargoes simpler and more efficient. Named TradeGo, the platform will remove the need for old-fashioned paper and instead use blockchain technology to digitize documents, which will help speed up customs clearance and delivery. Among the names involved are Sinochem Energy, Mitsui & Company, Macquarie CGM, and Saudi Aramco Energy Ventures. You can find more on that story at forecast.news. And the crypto market is showing no signs of slowing down. Amid swathes of green in the crypto top 10, according to data from CoinGecko, the global market cap hit almost $3.1 trillion Tuesday morning Asia time. Forecast News' Lachlan Keller has more.
Bitcoin hit a new all-time high of $68,641 Tuesday lunchtime Asia time. This is the second time in less than a month that Bitcoin has reached a new level after breaking the high watermark from the bull run it saw at the beginning of the year. One expert told Forecast News that El Salvador's recent adoption of Bitcoin, large companies adding it to their treasuries, continued institutional adoption, and the approval of Bitcoin futures ETFs have all contributed to the price action.
These series of events indicated to the market that institutional players and regulators worldwide have warmed to Bitcoin and see it as an investable asset. The market then takes this as a tacit approval, which then sees more inflows into spot markets globally, driving the price higher.
Ethereum has also been on a tear, gaining 10% since the start of the week to hit an all-time high of $4,857 Tuesday lunchtime. Yu says that while hitting a total crypto market cap of $3 trillion is remarkable,
it's also important to consider that there are different types of assets and they're all very distinct in its purpose, its ideology, its audiences, and its price discovery mechanism when compared to Bitcoin. So new investors should keep in mind that while there are many types of product in the cryptoverse, it doesn't necessarily mean that their prices will correlate and should correlate with each other.
Yu warns that even the most reputable traditional operators could find themselves in a dire situation without expert help in managing digital assets. For Forecast News, I'm Lachlan Keller.
Meanwhile, financial services giant MasterCard has partnered with 3 companies in the Asia-Pacific region to launch crypto-funded payment cards. Hong Kong-based Amber Group, Thailand's BitCub, and Australia's CoinDesk are the first APAC-based cryptocurrency platforms to join MasterCard's global crypto card program. Forecast News' Wright has the details.
The partnership will allow Amber, BitCub and CoinDesk customers to apply for crypto-funded MasterCard credit, debit or prepaid cards, allowing them to instantly convert their cryptocurrencies into traditional fiat currency. That fiat cash can then be spent with merchants either online or offline, anywhere MasterCard is accepted in the world. As demonstrated by recent market action, interest in crypto is growing all the time. And according to the MasterCard New Payments Index released in May, 45% of those surveyed in the APAC region said they were likely to consider using cryptocurrency in the next year. That's a huge increase over the 12% who said they had used it in the year before. For Forecast News, I'm Carolyn Wright.
And finally, just a reminder to join Forecast News at our Global Bitcoin and Beyond Virtual Summit November 10th Asia time. We've got some of the biggest names in blockchain joining us, including Don Tapscott, Sam Bankman-Fried of FTX, and Alex Mashinsky of Celsius, all newsmakers and blockchain leaders. It's a live event with an opportunity to engage with them and us. Sign up at bitcoinandbeyond.io. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.
All right, let's have a look at those green candles. The CoinDesk Bitcoin price XDX index currently trading at $67,924. Bitcoin is up about 3.7% over the past 24 hours. And the CoinDesk Ether price ETX index is up at $4,805, hitting that 1.9% mark in advance. And the new DFX CoinDesk's DeFi index is at 683 points, making in advance of about 3.9%. Turning to regulation, the Financial Action Task Force, a global anti-money laundering watchdog, has a set of recommendations for crypto firms. Among them include guidance for unhosted wallets and the travel rule, which refers to how transaction information should be shared among crypto firms. Joining us now is Rick McDonnell, Executive Director of the Association of Certified Anti-Money Laundering Specialists and former Executive Secretary of FATF. Hello there, Rick. Thanks for joining us. So maybe you can walk us through some of the key points in the new guidance released by FATF.
Well, first, thank you very much, and good morning, Christine and Lawrence and Emily. My pleasure to be here. The guidance, I would say, first of all, going back to what your previous guest said, the area of crypto now is too big to ignore, and that's the same on the regulatory side and growing very fast. So that means that all of the rules that traditional financial institutions have had to abide by in terms of anti-money laundering compliance for many years also now apply to this sector, to both stable coins and to VASPs, virtual asset service providers, and to cryptocurrency in general. So it's all about identifying who your originator of the transfers of money are and who is the beneficiary of that. Now, that might seem to be easy and not rocket science, which frankly it isn't, but the crypto platforms on blockchain were not established or not engineered to do that, as opposed to the traditional financial institutions, which have for many, many years had a compliance requirement to identify their customers, to ensure that there's customer due diligence, meaning what are they doing, monitoring their accounts if there's any suspicious activity, and reporting those to the right authority. In the US, it's FinCEN. And those rules are the ones which the guidance that's been issued recently indicate that the industry has to now apply. But it isn't easy. There is no solution at the moment that I am aware of that's immediately available for identifying the counterparties, but they're getting close, I believe.
So what's on the horizon for crypto service providers? How will they be impacted? Do you see them as collaborating and being, accepting this guidance and incorporating it in their practices?
Well, that's a good question. I think there was some reluctance, to put it mildly, at the beginning as to whether or not these rules should apply to a space which is essentially decentralized and not burdensome in terms of bureaucratic requirements. But the fact is, they have no choice. And I think they've come to terms with that the compliance requirements are facing them the same way as they are facing banks. And they've come to terms with that, in my view, and are now trying to build what I might colloquially call a dating app solution. In other words, how do you ensure that the identification of the person you're dealing with and the identification of the recipient of the transfer are real? And secondly, can you be sure that the VASP that you are a counterparty with, in other words, that you're exchanging money or funds with, is also reliable in terms of its capacity to identify risk? So we've got basically two things in operation here in relation to your question. One is, do they have to apply the same rules? The answer is categorically yes. Two is, how long will they be given to do that? The new guidance says it will be a phased approach. It doesn't give a timetable, but it recognizes that the re-engineering of the systems to identify counterparties in a decentralized system will take some time. But I think one thing to bear in mind, especially in the United States, recently there have been many issued reports and statements from the Secretary of the Treasury to the President's Working Group on stablecoins and to the SEC and others, which sound some alarm bells in relation to risk in general, not just money laundering, but also consumer protection and prudential issues in terms of potential fraud, etc. So as this industry and the volumes of transfers are continuing to skyrocket, then that still also applies to the money laundering requirements.
So Rick, I do want to ask you about the President's Working Group on stablecoins, because after reading it, do you consider, what's the general sense? Is that stablecoins may be even more of a threat potentially than privacy coins in terms of money laundering? Is there a consensus among regulators as to whether or not that's the case?
Personally, I don't think there is yet a consensus, and I think that's because when one looks at risk, and the underpinning requirement in all of this is, do you know who you're dealing with, and do you know the risks associated with not just those people, but with the products that you're using? And the products are a variety of things. So in relation to your question, I don't think it's an apples to apples consideration. It's a matter of what the risks are in relation to your particular product. So for stablecoins, I don't see that as any particularly more difficult risk associated for money laundering purposes. It all comes down to, can you identify whether or not there's something unusual or suspicious going on once you've got the capacity to identify people who are doing the transactions. Most people doing these transactions are quite legitimate. The transactions are legitimate. The issue really for anti-money laundering is what is illegitimate. And I think in that sense, the rule applies across the board equally. So the important
there's recently
thing is,
been quite a... sorry. Go on.
No, go ahead.
Go on. I was just going to ask you a slightly different question, which is there has recently been a huge boom in the NFT market. And I'm curious, how much NFTs are on your radar as a possible means for money laundering?
I think NFTs have become very newsworthy in the last 6 to 12 months, but they're not the main focal point at the moment, because the volume and value of transactions, as far as I can determine, is nowhere near the actual pure transfers of value or money on the crypto space, whether that be in the US, convertible virtual currencies, stable coins, and any other cryptocurrency transaction has a greater volume attached to it. So I think that NFTs should be on the radar and are on the radar, but they're not the main game at the moment, in my view.
You mentioned that crypto service providers may be reluctant to abide by FATF guidance. So I'm wondering how FATF might, or global regulators might get them to agree, because when global crypto policy takes shape, how do you see that going forward, considering that, various countries have different approaches to crypto? In China, at least, they are having an outright ban and crackdown. In the United States, a little bit more interested in exploring it. In other jurisdictions like Panama, Bahamas, they're much more liberal in their policy toward crypto.
Yes, well, it is a mixed bag indeed, as you say. But the fact remains that while I said that there was reluctance because the systems were not built this way, there's now, I think, an acceptance that if you don't put in place a compliance framework that's robust and you can't identify who the beneficiary and the originator of the transfer is, then the regulators will come down on you very hard. And I think that's been noted recently. Again, the Secretary of the Treasury and the President's Working Group has indicated that that in that report that there's legislative change that's also necessary in the US. And until that time, if Congress agrees to make changes to the legislation to make things more stringent in this space, then they're encouraged, all the regulators are encouraged by that report to ensure that they use to the maximum the mandates and the sanctions that they have available to them now. So I think it's going to get tougher. It will be phased, but I think you'll see an increasing number of sanctions being applied within the existing laws if the compliance frameworks are not acceptable to the regulator.
All right, well, Rick, thank you very much for your insights. You obviously have deep knowledge in this area. That was former FATF Executive Secretary and ACAM's Executive Director, Rick McDonald. Coming up, checking in on Nigeria's rollout of Africa's first central bank digital currency, the e-Naira, and an update from Florida on the lawsuit against Craig Wright.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. The high-profile trial between the Kleiman estate and Craig Wright continues. Wright claims to be the inventor of Bitcoin and the owner of over 1 million Bitcoins. The estate of his deceased friend and alleged business partner, Dave Kleiman, is requesting their share of the Bitcoin fortune. Joining us now from Florida, where the trial is taking place, is CoinDesk reporter Cheyenne Ligon. Hi there, Cheyenne. So you've been covering the Craig Wright trial for CoinDesk over the past week. Walk us through what you've seen so far.
Yeah, so it's been really interesting. As you said, this case is about Craig Wright, who claims to be Satoshi Nakamoto, and he's being sued by the estate of his former best friend and business partner, Dave Kleiman. So we've heard from a lot of people in both of the men's lives, including Ira Kleiman, who's Dave's brother. Dave passed away in 2013, so Ira is representing his estate, as well as a lot of people from the men's personal lives during the time period in question, including Ramona Watts, who's Craig's wife, and then some coworkers, friends of Dave and Craig at the time. So yesterday, Craig took the stand for the first time. That was very interesting. We've heard from a lot of other people, too. We've heard from Andreas Antonopoulos, the Bitcoin expert who was retained as an expert witness by the plaintiff to explain sort of the basics of crypto to the jury. Gavin Andreessen, the former lead Bitcoin developer. But yes, yesterday, Craig took the stand for the first time. And before we get into that, I will say that his testimony is not over. He's going to go today and probably into tomorrow too, but it didn't really go very well. He was shown a lot of pieces of contradictory evidence, and he didn't really have good answers for them. He contradicted a lot of his own statements, as well as a host of legal documents he was shown.
So what exactly did Craig Wright say on the stand? Like, what exactly was he? What was his? What were the issues there?
So, I mean, it's hard to know exactly what his full story is because he hasn't finished testifying yet. But yesterday, most of the testimony revolved around a issue he had with the Australian Tax Office, which is sort of the Australian IRS, which is where a lot of the documents come from in this case, where he kind of begins to claim on paper that he and Dave had a business partnership, that partnership was responsible for mining Bitcoin. And he said that a lot of the documents that he was shown never happened. He also claimed that a lot of what they were mining were actually testnet Bitcoins and not real Bitcoins. So it's all very complicated, and I don't really know where he's going with it yet, but we'll see. We'll see later today.
So Cheyenne, what's next? What are we looking at now?
Yeah, so the trial is scheduled to last 3 weeks, but the way that things are going, it will probably last into a fourth, who knows, maybe a fifth. That's sometimes how these things go. For this week, we're ending early on Wednesday because of Veterans Day. But when we come back, when everybody finishes testifying and we get through the closing arguments, the jury will be asked to decide whether IRA potentially is owed tens of billions of dollars from Craig. And that's when things get really interesting, because a lot of people don't believe that Craig has access to these coins. And if he does have access, how the court can force him to give them to IRA. So who knows what comes next? It's exciting.
Yeah, it's a very fascinating case. And Cheyenne, thank you very much for covering it for CoinDesk. You can read her articles on CoinDesk.com. Great having you on. That was CoinDesk reporter Cheyenne Ligon in Florida.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Nigeria's central bank digital currency, the Naira, is in its second week of operation. So how's it going? Local paper The Cable reporting that the government-run Naira Speed Wallet app has over 360,000 downloads from 160 countries around the world just 10 days after its release. Joining us now is Ile Badamosi, CEO and co-founder of Nestcoin in Nigeria. Hi there, Ile. Thanks for joining us. So how is the rollout going?
The rollout has been pretty interesting. So thanks very much for having me, guys, on the show. But yeah, the rollout has been pretty interesting. There was, number one, there was a bit of a delay initially in terms of the official launch date. So the government initially wanted to launch it at around the Independence Day, which wasn't met. So it was pushed back a couple of weeks. We finally went live, like you said, about 2 weeks ago. After about 3 or 4 days, the app was actually taken off the App Store, from off the Google App Store. But I think there's definitely been a lot of curiosity about like the Naira, what is it, the Speed Wallet, and why should people use it? But overall, I think it's been more of a curiosity-based response as more than anything.
So, yeah, I'm actually very curious about all of those things, like what is it? How do they use it? Why should we use it? So if you could shed some light on that, like what exactly is this? What is it supposed to be used for? What are people using it for? Who is using it? Like, yeah. I think we're all curious. Yeah.
Yeah. So, I mean, I think like for a lot of Nigerians, these are questions that they're all trying to answer as well. But the main goal, one of the big kind of like drivers for the central bank issuing a central bank digital currency was really around driving financial inclusion, right? So for people who have sort of like mobile phones and or smartphones rather, and an internet connection, this might not seem as interesting. But I think like the broad sort of like goal for the central bank is to figure out how this Naira can be used on sort of like feature phones and used by people who currently are excluded from the financial system. So that's sort of like the long-term vision. But in terms of what we can use it for today, essentially it's very similar to like any fintech app. It doesn't feel like cryptocurrency in any way. I think of it as a digital currency, really. It's not a ERC20 or any kind of blockchain standard that you can withdraw from the Speed Wallet to on like any of the more permissionless blockchains. But to be honest, like the UX is pretty sleek. I have to give the government credit, but the jury's still out on this one. I'm not so sure if people are going to really transition from digital payments into the Naira.
So what's really interesting about this is kind of Nigeria's larger stance on cryptocurrency, which, according to my understanding, hasn't been entirely friendly, right? There's been sort of various bans, over the past couple of years. But so I guess my question is, like, cryptocurrency market is still booming in Nigeria in spite of this, right? I mean, is that a correct statement? And also, do you think this is some sort of attempt from the government to counteract the power of Bitcoin and other cryptocurrencies? Like, are they trying to sort of put a replacement? And is that what their larger game is here?
Yeah. So, I mean, I think I try to use the word restrictions as opposed to ban, in that in Nigeria, the Bitcoin or cryptocurrency isn't illegal. In fact, there are sort of lawyers and legal opinion that actually states that the central bank doesn't have the authority to make cryptocurrency legal, and that has to go through the National Assembly, which hasn't been done. There was a recent ruling a couple of weeks ago whereby a high court judge actually instructed a bank to unfreeze the account of one of the startups who was accused wrongly about sort of using or transacting in cryptocurrency. So that was a huge sort of landmark precedence for all of us that are pro crypto across Africa and Nigeria. But in terms of the relationship, it's really an interesting paradox, right? So where you have this restrictions around crypto, but at the same time, the central bank is also its own digital currency. So that is definitely something that is interesting and of note.
So yeah, there very few populations in the world are as pro or crypto friendly as that of Nigeria. But so are there concerns among the people about a centralized government controlled digital currency? And is that do you think why we have this issue of lack of adoption, or at least a subtle situation there?
Yeah. So I think the reaction right now still feels very much like apathy. And I think this is kind of consistent across the continent and Nigeria especially, right? So people do want access to crypto, primarily because they see it as an opportunity to earn and make a living, right? So one of the stats I like to talk about most is that you have 40% of our population earning less than $2 a day, right? And in a drop of inflation, and so being able to kind of access financial services, something that or a more reliable economic system is something that is a deep-seated desire, right? So I do hope generally that over time we have voices in our leadership and sort of government, so that crypto, as opposed to seen as something that is anti-progress, is being seen as a potential solution to some of the larger problems that we have across Nigeria.
Well, Yele, it's always a pleasure having you on. You have a great sense of what's going on in Nigeria and always very eloquent in sharing that with us. Thank you for joining us. That was Nestcoin CEO and co-founder Yele Bodamosi. Time now to check in with Crypto Twitter with our tweet of the day. This one from a young lady who goes by the Twitter handle Kaylee Buemi, Diamond Hands, tweeting, "Bitcoin changed my life. I don't mean financially. It literally changed the way I see the world. It encourages me to ask questions and verify. It taught me how to be self-sufficient and figure it out for myself. I'm very forever grateful for Bitcoin." So something good happening in these all-time high
record-breaking times. People say that about dogs too.
Yes. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin coming up at noon with the folks from The Hash. You're watching CoinDesk TV.